for Coinbase itself was put in the S&P 500 just a couple months ago, and these are all 3.54 beta stocks. So when you're in a big bull market rally, and a lot of your backing is the Bitcoin holdings or Bitcoin infrastructure, this is the bull trade of the century right now. And this is after the halving a year or so ago, this is the bull market phase for this type of stuff.
So you like it? We're going up from here? I presume from what you just said we are.
Yeah, I mean, the thing, Steve, this week we've got this thing called Crypto Week going on in the House of Representatives. They're likely to vote on the passage of this Genius Act stablecoin bill, which is, driving up all the infrastructure providers. So that's Robinhood, that's Coinbase, and these groups like, Tether and Circle who provide these stablecoins. And even more interesting, Steve, is Walmart and Amazon may get into the stablecoin business on the back end of this, and that would be an attack on Visa and MasterCard fees because they're basically free if you get a stable coin off of one of these systems. So we do need to pay attention to this as more than just something faddish and speculative within the Coinbase crypto Bitcoin world, but something that actually could transpire into the retail space.
John, I mean, last time I checked, and I must be honest, I haven't checked for a while, there were 13,000 different cryptos. We are talking about just one or two winners here. We're not talking about 13,000 bets on the upside of crypto, are we?
No, we're not. We're actually talking about something very different. See, these stable coins are 1-to-1 USD or 1-to-1 on the euro. Typically, that's the two types. And they're backed by most often just treasuries. And so how these stable coins work is people earn interest on the treasuries that back the 1-to-1 ratio. So, the stable coin is going to get people into this thing where you can actually count on the value of things. What I will tell you, though, is Circle back in the Silicon Valley Bank days did break the $1 parity. So, the name is going to be somewhat fictitious because, this gets to why these acts and all these regulations are getting put in place because we still haven't found our way to a place where these really are stable coins.
Yeah, I guess the wily amongst our viewers and the cautious old donkeys out there like myself, they might say, well, why don't I just own treasuries instead? If it's backed by treasury, why don't I just buy the treasury? Then I can cut out the volatile bit.
Absolutely. I mean, this is a market that is built around, if you look at the socioeconomics, it's young men with cell phones, basically. But what I'll tell you, Steve, is more interesting is like the Robinhood story. So they've got 25 million, subscribers in that system. These people that, did a lot of this trading on their phone back, 2020, 2021. And now what they're doing is tokenizing stocks. So here again, you can say, oh, I own stocks. Let's talk stocks. Well, tokenizing stocks are zero transaction fees. You just get a representation of the stock and trade its price. So I think, also what's happening, Steve, is, through that tokenization of stocks, we're getting a lot of these, penny stocks on Robinhood, driving a lot of the volume and assisting this bull market. So again, we gotta realize that this is all like being, supercharging this current rally, this whole story we're talking about in the stock market, and particularly this tech stock market in the United States.